Precisely. Over the weekend, right, Trump issued a memo about American first investment policy, which, as you described, would limit Chinese capital to invest into U.S. critical technologies, as well as limiting U.S. capital to invest into Chinese tech sectors. And that memo is like a sequel, to a similar trade memo, a memo on trade by Trump recently, which limits the sale of advanced chips such as NVIDIA's, to China. So essentially, this AI race is real, and the competition is on. And the NVIDIA and the types of U.S. companies and the Chinese companies will be caught in this cross-border tech war, both from the trade perspective as well as from the investment perspective.
Hi, Winston. So, do you feel that U.S. export controls and restrictions of any magnitude or nature against China at this point in the cycle are something of a fool's errand? And let me try to explain why. Because of DeepSeek, to what degree has DeepSeek profoundly changed this narrative? It's been described as a Sputnik moment. Also, we know that Xi Jinping is wholeheartedly embracing the tech titans and is going to be adopting a more supportive policy framework for them. Does all that point to China being way ahead in the race for technological leadership?
As you said, it's profound because, there's a DeepSeek and the subsequent China actions, including the President Xi's meeting with the overall ecosystem of tech entrepreneurs, are creating a profound shift of the overall AI narrative, right? Number one, you already mentioned, DeepSeek has replicated a similar AI capabilities like ChatGPT of OpenAI, which with substantially lower cost. And secondly, maybe even more profound, right, is that OpenAI has started this open source movement, not only in China, because after DeepSeek, you also have seen Alibaba's Qwen model, etc., right, also started free and open source to some extent. And you have also seen Europe, right, led by companies like Mistral to come up with open source big model as well. So essentially, this fast movement of open source, right, makes big models fairly commoditized and also open, right? And then the third one is the final point is about scaling, right? After the big model, where the value is, and it will be more at the application layer above the basic digital infrastructure like NVIDIA data centers and big models like ChatGPT, right? It will become more application connected with industries, and for that, China has advantage of industry policies plus the government supported digital infrastructure similar to Stargate of the U.S. concept to promote computing power.
So, Winston, if we wrap it all up, what does this mean then for the US-listed China tech names, Baidu, Ali, and Tencent?
For these US-listed Chinese companies, they are going through this headache again. If you recall, like 2 years ago, we were worried about the delisting risk of the Chinese tech companies listed in New York because of their accounting issues and also because of the connection with U.S. investors, right? But now actually everything comes back and probably with a little more urgency because of the latest Trump memo, right? First, Trump mentioned about rechecking the Hold Foreign Companies Accountable Act, which has a two-year clock, like delisting after 2 years non-compliance of PCAOB accounting rules. So it's coming back, right? And secondly, it puts more restriction on U.S. investors to get into these companies because in the Biden era, the outbound investing, limiting U.S. investors like pension funds, like university endowments into Chinese tech companies, mostly was limited to M&A transactions and direct investing, right? But now the Trump memo expands that into public securities as well as passive LP investing. So which means for pension funds and the university endowments and other LP type investors, they have to check their passive investments as well, in addition to their direct investing. Which has implications clearly, to listed companies like Alibaba, Baidu, and the new EV companies like Xiaopeng, etc., that are listed in the U.S.